Options traders and Cobra trading students, this is Cobra 1 giving you guys a recap on December 18, 2019 and things to look out for and be aware of tomorrow. So let's just hop right into it. The S&P 500 closed down 0.5%, Dow down 0.10%, WTI crude closed up a 0.16%. The dollar closed above the yen and the euro. Gold up 3%. Gold slightly higher, up a basis point, and futures as of right now remain flat. Bonds sitting roughly on a 200-day support at 155 into the after hours right now into the futures market. So what I want to get into, guys, is just kind of talking about, our market overall and where we are. If we actually take a look at our market, we are hitting those new all-time highs. We have been hitting all-time highs for the past 19 weeks, consolidating within an options expected move. You guys can see that we're steadily grinding up higher, slowly. We're actually into 5 distribution days on the S&P 500, 4 on the NASDAQ as of today. For those that have been following me, just to reiterate once more, a distribution day within the market is a sign of institutional selling anytime one of the main indexes, New York Stock Exchange, S&P 500, or the Dow closed below 0.20% for the day. So we are at 5 on the S&P 500, 4 on the NASDAQ, and are continuously grinding up higher. However, we have been pretty much moving within an expected range, an expected move between a red and a yellow-green line, which represents standard deviation within the options market pricing for that following week. Not to get too much into the indicator itself, but what is our market actually looking at and seeing around this time? Keep in mind that trade talks were in the wind over the past couple of weeks, and during this past week we actually came out of it. Phase 1 deal has been reached. Fed remains neutral and dovish to some. They haven't moved or put out any new news, and anything in terms of the Brexit, that's all cleared and gone out the way. So really you got to ask yourself, what else is there that's actually going to push this market to move into higher ground or to higher levels? What we see right now as today is that, or for the most part, throughout this week, is that, beginning on Monday, we actually had a spike up, but for the most part, we made that expected move that was already encompassed and accounted for at the beginning of this week. And then these 2 days back to back, Tuesday and today, we saw red. Keep in mind too that a back-to-back day right here at the 320 level seems like we've pretty much topped out. Do I believe the market can grind up higher? Absolutely, unequivocally, yes. But we do have to bear in mind that we are pretty much into ground of meeting these expected moves. There's not much news out there. The market right now is coming close to the end of the fiscal year. For the most part, firms just want to hold on to their gains leading up into the next year, where then they'll decide to actually allocate cash and capital elsewhere. One thing I did want to cover, though, however, is that the S&P 500, you guys can see that, yes, we have been on a steady trend to the upside. Looking at if we were actually to draw a trend channel and just go back to back from these lows, okay, and actually bring this back up here and then extend these outward, we've pretty much consolidated and trended nicely within this channel until eventually around early November we broke out of it and started beginning to make new highs. So if I actually take out a regression channel that kind of bases everything off of a standard deviation of 1, which is our expected move, and we draw this back from a time frame from early June leading up to today's market where we're hitting new highs, we're actually hitting into resistance where our standard deviation line is at. We have 2 back-to-back red days. One thing that you do need to keep in mind, though, however, is that our market is fairly strong, and Decembers historically have always been known in the market to be strong. Quarter 4 reports come out, it's the end of the fiscal year. We didn't have a strong December last year, but several Decembers before the one last year were pretty strong. Historically, if you guys look back in date, Decembers have always been a pretty strong market. We can look at the weekly chart, and one thing that you see is that yes, we did hit the top of the expected move. At the beginning of this week, we're actually, into a tad bit of volatility versus last week. We had an expected move last week of 40 points, and this week we have an expected move of 42 points, which means that markets this week are a bit volatile. We'll actually start to see more volatility come in as the week progresses. This is the last week leading up until, pretty much next year, with the holidays in line for next week and the week after, that we'll actually have with this market, ending on a key note. But if we look at this right here, we can see that we've topped out the expected move for the daily. We had 3 days, pretty much, or 2 days of back-to-back trading, and this being a second bearish sign right here, confirmation candle of a candle closing lower than the previous day. That could be an indication that there may be some selling down to the median of, if we put in our expected moves, we can see down to the median of 317 for this week. That looks like where our market actually wants to pull back to. But there's still a chance that we could still hold these levels and not do anything at all. So the one thing I do want to keep in mind, though, is that looking at the bigger picture for the overall market, we are bullish still on the weekly, and on the monthly we are also aligned with a bullish candlestick. So there's not without a doubt a chance that this market can still grind up higher. Analysts have topped out 340 price lines and price targets for the year. There was a 360 price target for 2020. Although we're not thinking about holding that long, it's just something to be mindful of what the market's already pricing in. We can actually put in an indicator known as the standard deviation channel. And unlike the regression channel that bases everything off of one standard deviation, our standard deviation channel bases everything off of a 2 standard deviation. So for those that haven't been following me and those that have, our 1 standard deviation in the market is derived from a 68.27%, and our standard deviation 2 channel is based off a 95% chance of probabilities and trades working out in your favor, staying within these channels. So you guys can see that we have a 340, 345 mark on our 2 standard deviation. The last time we ever got to the end of it was back in early December, when our market was crashing back towards the end of 2018, before we ended up rallying higher into this end of the year of 2019. But we are topped out pretty much at the 1 standard deviation. If we do break beyond this, it would pretty much call for a new trend, and anything above 320 calls for a push even higher. So just something to be mindful of. There was a trade that I got into, Boeing. We actually took it down. A couple of the guys in the room, in the chat room, were actually alongside with me in it, short. I actually opened up a position in Boeing 3 weeks out, calling a 330 price target. When we actually look at, where we are and Boeing itself and where Boeing is as of right now, we are sitting at exactly the 330.68 price target, 330 price target that was in mind. I can actually remove these alerts that were placed a couple weeks back. But the whole entire reason is because there was a channel going back here on Boeing. We took, as a contrarian, I went short around 365. It ended up grinding up higher, hitting off of this trend line that dated back from late September and late February of this year. And we ended up pulling back pretty much down to where Boeing has consolidated in mid-August and mid-October, and we're sitting here right now. So a lot of people are looking at this, and what I have to say is that Boeing is being the heaviest weighter in the Dow. If our market decides to pull, or if Boeing decides to break down below 330, our market will pull. Boeing and the S&P 500 are closely correlated with one another. Being the heaviest weighter in a Dow, if this stock does sell off, the rest of the market will follow alongside with it. When we're looking at this chart, though, however, and I'll get into a little bit more about Boeing in just a minute, when we are looking at this chart, what do I see? A lot of people are trying to buy this off the dip and possibly take it for a long position. It could possibly work out. If you guys are looking at this, the stock has pretty much, hit into support. It's in a consolidation trend where it's just bouncing back and forth between this wedge. And what we see is that if you were actually getting long in this position, yeah, I mean, Boeing would have worked out for you at three. The low of this was 320. It came back. Right now it sits at 330. Went up to a high of 335. Caught some selling today. Okay, Boeing can possibly go to this next trend line for those who are actually looking to take it long. However, I don't see that happening. What I do see is something new. If we dive a little bit deeper into it, well, first of all, I want you guys to be aware of this sell volume that's occurring. Okay, and we'll get into talking about volume in just a minute, but every single time there's volume that occurs, heavy volume, okay, there's volume days later that follow behind it. When we actually do look at this trade, there's heavy volume right here. We also, after coming down and actually gapping down lower, we do have a little bit of selling. We could see that today. But if we were actually draw a trend line from where we went short and just extend that, okay, this trend line that we drew just now acts as our resistance right here. So buy volume was not significantly higher than the day prior, okay? Doesn't mean that it can't be higher tomorrow, or for you viewers who are actually watching this in real time today, we could probably grind up higher. But bear in mind that we do have some resistance at 335, okay, and then we have this overhead trend line that comes into effect now. That's going to be a challenge for us at 340. Okay, so if anybody was actually looking to take this trade, I would be more so lean towards the short side, Boeing, and we're looking at it fundamentally, not just from a technical analysis. Boeing has really had a lot of issues with their fundamental and EPSs just for the year. I mean, if we were looking at it just overall from a yearly perspective of how they perform so far, just this year, but we can go back a minimum of 3 years. We pretty much haven't done anything. Boeing has just pretty much been stuck within this range where it's at right now. You guys can see that it just hovers within this channel, and it has never returned back to this high of 446. So a breakdown below this level will bring us down here to 290, 300 area. A break below that will be really, really bad, not just for the stock itself, but the market overall. Just something to bear in mind and keep in the back of your mind that if Boeing does pull, the rest of the market will pull. But if we're actually looking at this, and a lot of bulls who are bullish within this market, they have their buys, and then you have your bears who have their buys. What does this mean? I mean, our market's at all-time highs. We have not really had a sell-off or pullback of more than 10%. We haven't had one at all, actually, over the last 19 weeks. So the market actually does call for some alleviation as of right now from these points and these highs. If Boeing does actually end up breaking this 330, the market will follow. There'll be some sharp selling to follow along with it. Now, some of you guys may be thinking like, okay, well, hey, Cobra One, you just said if Boeing actually begins to pull, the market will pull alongside with it. But yet, as we look at this, Boeing, yes, over the last Monday until now, the stock has dropped over 10%. 10%. Now, when Boeing pulls 1%, the market feels it. And the reason is because, well, it's the heaviest weighter in the Dow. But why, even though Boeing dropped 10%, why did the rest of the market not feel it? Okay, so if we actually go back to Boeing, it's actually easier to draw out a visual and do a comparison in the background. Here, I'll add a study. We'll go here, custom symbol, and we'll type in SPY to go alongside with it. Okay, why? When Monday we were actually dropping, we did a gap down lower, and then Tuesday and Wednesday to follow, we actually went lower. Why was the market still grinding up higher? This type of information that comes about suggests that the Dow is actually being manipulated at this point. And what I mean by that is that, yes, our S&P 500 is moving up higher as Boeing was moving down lower. What we also need to consider is that Apple has been on a rampage over the past couple of weeks and also has been moving alongside with strong relative strength within the market itself, and also the name. It's been on a rampage. I mean, this behemoth has been running since since early August, all the way, if we actually go all the way back to early June, we can see it's up almost nearly 100 points. And also, one thing to also bear in mind is that the healthcare sector, some of you guys have been following me and subscribed to this channel. I've spoke about the healthcare sector. Actually, when Boeing actually dumps out, we can actually go over to UNH. Firms need to allocate capital elsewhere into the next heaviest weighter. And that being, when we actually pull up the comparison within those names within the Dow, UNH is actually one of them next to Apple. This is where they're rotating their money flow to. So if we actually get rid of this, because this is the S&P 500, let's go back to Boeing real quick. All right, we're actually going to take away the comparison to the S&P 500. Okay, and what we're going to do is we're going to add, this is Boeing stock that we're looking at right now. We're actually going to compare this to UNH. Okay, when we do that, what do you guys notice? Is that UNH and Boeing move inversely against one another simply because, well, when we're actually looking at the sectors from a risk-on standpoint to a risk-off, okay, our healthcare sector being one of them, trade allocation and capital needs to move elsewhere when Boeing is actually going down. Apple and UNH, United Healthcare, actually being two of the next biggest weighters in the Dow. This is where they're going. Okay, so when Boeing actually catches a bid up, UNH will move back down, and when Boeing goes down, UNH will go up. We can actually remove this right here, and we can see that just looking at Boeing right here, if we do break this 330 level, as I reiterated, it will be really bad for the market. The market will actually pull alongside with it. So I actually think that our market will sell off anymore. I think that we can grind up higher, but we are losing momentum in the process of it. So if we go back to the market, yes, we're topped out near a resistance level at the standard deviation of 1. We're losing momentum. Volume, bull volume has dried up a bit, and now we're starting to get some bear volume. Okay, what this market really needs is just a catalyst just to push it down, 100 points in the SPX. And the rest of the market and everything else will trigger alongside with it. Okay, VVIX and the VIX itself has been catching a bit up higher, even though, and the volume within the VIX has been catching up a bit up higher. However, during last Friday, there was a lot of rolling contracts for the last VIX. We are starting to catch some bids up right now, and futures do point for when we are actually talking about the volatility. Futures out till January, February actually are moving, into the 1585 areas and 16 level. Okay, so those who are actually trying to get long in our VIX and they're saying, hey, look, it's $12 right now. No, VIX is actually encompassed from the VIX futures. And when you really look at that, if you were actually trying to buy any calls in the VIX, you really need to price in. Are you okay with purchasing those VIX calls at the $16 or $15 mark? Because that's where they're really priced at right now in terms of premium. So we're going back and we actually look at the SPY. We can see that also the SPY and Apple itself. Apple caught a sell-off towards the end of today and ended up with the gravestone. I do think that we can actually come back down roughly to the expected move of 275 for this week. We could probably get that tomorrow. We may catch a sell-off, or we may just even come down to 278 before catching a bid and just sit sideways throughout this. But bear in mind that our markets are consolidating right now. We are drying up. Momentum is dying off right now. Okay, we are into the end of December, so we really it's kind of a give or take, but our market will. If you think about the probability to the upside versus the probability to the downside, placing trades, we never really know where the top is at. Okay, but we do know where resistance is at, and in that case, from what we know, we can always preempt ourselves into placing those trades into those key points of resistance in anticipation to take them down lower. Same thing for market bottoms, or in this case, the key term that most traders use on Wall Street is catching a falling knife. We never really know where the bottom is, but what we do know is where support is at, and what we can do is preempt ourselves into placing trades into key areas of support in anticipation for what's going to occur weeks and days after. So, a couple names to keep on watch for tomorrow. We've had a strong rally in Tesla. I wouldn't recommend catching the hype. And with our market, if we actually do begin to rally and continue up higher, we never really buy into all-time highs or 52-week all-time highs. If we could actually pull off of this and go back out and date, you can see that Tesla actually had a move up to 400, or an attempt to move. Okay, first at the 375, 385 level. Now we're at 395. Stock actually is now breaking out, moving up to this 400 level key area. We actually opened up and got long this position. A couple traders who actually have been following me in some of the trades that I got into weeks back, early December, and we sold as of Monday up here to the retest at these highs. Take your money and run. Had we held all the way up to this point, it would have been a $4,000 win. However, can't ever get greedy. Tesla is on a run for 400. For those actually wanting to get and partake in this trade, I would never recommend buying into all-time highs. However, what we can do is preempt ourselves into setting up an order, possibly at 385 or maybe 380, to try to actually catch a pullback into a run into new all-time highs. So Tesla at 400. Another stock that has been on the watch for those that actually are momentum traders in the room is Shopify. We actually started making a run up from early November and pivot off of this retracement, broke out of this regression channel at the end of November into early December. This is where we saw heavy buying. Tesla actually is on a move for the 400 level as well too. Okay, so Tesla at 400 and Shopify at 400. All right, another stock that we can keep on watch lastly is Spotify. All right, stock actually came up with the cup handle base right here, retesting these all-time highs, but the stock is actually strong off of relative strength right now, increasing, and also has a A+ accumulation based off of Investor's Business Daily. The stock right here is at the 150 mark. Now, what I did was I opened up a backspread ratio, selling the 160s and buying vertical at the 160s to 162s. And pretty much, if this stock begins to run, it was paid for a credit of 70 cents. So we actually do take this trade and make a move and it breaks out. It'll be a very low risk to reward area and opportunity if it gets above this 155 mark. Data suggests that if we do break above this 155 level, we will want to retest early August levels at the 160. Relative strength is increasing, so that's another thing to be aware of, is that as relative strength increases, the stronger gets stronger and the weaker gets weaker. Relative strength is actually moving beyond price action right now, so price action will be the second to follow. So there's something to keep on watch. This trade is highly probable. And that is all I got for you guys. I'll see you guys in the chat room tomorrow.